Saxo Bank, a Danish bank, not a CFD broker. Worth paying up for? Here's the honest answer.
Saxo Bank AS is a chartered Danish bank, not a broker that holds a banking partner. An actual bank, supervised by the Danish FSA under EU banking rules. Founded in 1992, independently owned. That sounds like marketing. It isn't. Here's what changes mechanically. At a normal broker, your cash sits in a segregated client pool. Legally ring-fenced, sure, but still a broker's account at someone else's bank. The protection there comes from investor compensation schemes. Capped, slow, jurisdiction dependent. At Saxo, your cash is on bank deposit. That triggers the Danish state deposit guarantee, 100,000 euros per client, paid directly by the Danish state if the bank itself fails. Not the broker entity, the bank. That distinction is the entire game. That's a completely different category of protection. Same money, different legal wrapper, very different outcome in a crisis. Remember that 100,000 euro number. It's the structural reason Saxo doesn't sit on the same shelf as a CFD broker. Now layer regulation on top of the bank license, because Saxo doesn't just operate in Denmark. 9 regulators, 4 continents, the FCA in the UK, FINMA in Switzerland, MAS in Singapore, ASIC in Australia, the JFSA in Japan, AMF in France, AFM in the Netherlands, FINRA in the United States, and the Danish FSA sitting on top as the banking primary. Most brokers chase regulator stamps because more logos sound safer on a landing page. The logic at Saxo is different. Each license corresponds to a legal entity actually holding client assets in that jurisdiction. A UK client's cash sits at Saxo's FCA regulated entity under UK rules. A Singapore client sits under MAS. Your jurisdiction has its own custody, its own rules, its own protections. Not an offshore shell sharing a logo on the homepage. That matters when something breaks. Local regulators can actually intervene on your behalf. Now add 30+ years of operation with no material regulatory enforcement action publicly disclosed. 30 years in this business without a serious black mark is not normal. The list of brokers that can say the same is short. That is the strongest custody setup you can get in retail. Full stop. Custody is half the story. The other half is what you can actually trade. And this is where Saxo stops looking like a broker and starts looking like a private bank. 70,000 instruments. Real ones. Most brokers advertise huge instrument counts that turn out to be mostly CFDs on the same underlying equities, just wrapped as derivatives. Saxo's catalog is structurally different. 23,500 actual shares, not contracts for difference, the underlying stock itself. 7,400 ETFs, almost 6,000 bonds. And bonds are the asset class retail brokers basically refuse to touch because they're complex to price and thin on margin. 1,200 listed options, 940 futures, 190 forex pairs. Here's the practical version of what that catalog unlocks. You can hold a corporate bond, a US-listed ETF, a futures hedge on the S&P, and a euro-dollar position in one account, under one bank, on one consolidated tax statement at year-end. That last bit matters more than it sounds. Running multiple brokers means multiple statements, multiple tax filings, multiple custody risks to track. That kind of single-account multi-asset access doesn't exist anywhere else in retail, not at this scope. 2 platforms. SaxoTraderGO runs in your browser and on mobile. Clean, professional, no compromises. Order entry, charting, portfolio, research, all stitched into one screen. This is what most clients use day to day, and it's better than what you'd get at any pure CFD shop. Most people will live in Go and never need anything else. But the platform that surprises people is SaxoTraderPRO, desktop only, aimed at active traders and institutions. And here's the rare thing, a genuinely professional-grade trading terminal sitting inside a retail-accessible broker. That kind of platform usually lives in the institutional world, not the retail one. That alone makes Saxo unusual. That's the upside. The downside is just as real. If you've never traded before, SaxoTraderPRO will not help you. It'll paralyze you. The depth is the feature for one type of trader, it's the problem for another. And the price tag stays the same regardless of which one you are. Capability you can't use is not capability you should pay for. So if the custody is bank grade, the catalog is institutional, and the platforms are professional, what's the catch? Cost. Saxo is not the cheapest broker. It is not trying to be. Euro-USD typical spread on the classic account runs around 0.6 to 0.9 pips. A pure CFD scalper at IC Markets or Pepperstone is paying a fraction of that on a raw account. Share commissions start at roughly 0.08% with small minimums. Fine for an investor sizing positions in thousands, expensive for a day trader churning size every hour. Here's the mechanism behind the price tag. Saxo is priced as a bank, not a discount broker. You're paying for the license, the deposit cover, the catalog, the platform, not just the trade itself. The economics of running a chartered bank with 9 regulatory licenses are not the economics of a thin CFD shop. They can't be. And the tier system is how it becomes reasonable for the clients actually using all of that capacity. Classic is the entry tier. No minimum on most entities. Full instrument catalog from day one. So you're not gated from the product, you're just paying retail pricing on it. That's important. Some brokers gate features behind balance tiers. Saxo gates pricing, not access. Platinum unlocks at $200,000 funded. VIP unlocks at $1 million. Each step meaningfully tightens spreads and commissions. If you're funding with $500, the math is brutal. You're paying bank prices for retail volume. If you're a high volume investor sitting at platinum or above, the math flips entirely. The cost stops being the story, the access becomes the story. So who actually opens a Saxo account in 2026? Open Saxo if you trade more than one asset class from a single account. Equities, bonds, options, futures, forex. Saxo is the only retail accessible broker that genuinely does all 5 at depth. Open Saxo if you want bank-level custody and that €100,000 Danish deposit guarantee I flagged at the start. That's the payoff on the structure. It's not a marketing line, it's the legal reason this broker sits one tier above its CFD competition when something actually goes wrong. And open Saxo if you can realistically fund platinum or higher, because that's where the cost equation actually works for you. Walk away if you only trade one forex pair and want the absolute tightest raw spread. That's a different broker entirely, and you already know which ones. Walk away if you're new to trading and you've never sized a position before. SaxoTraderPRO will not be your friend, and the depth will hurt more than it helps. And walk away if you're funding with $500 while you learn the basics. The capability is overkill. The cost is wrong. You'll outgrow the account before you grow into it. Final verdict, 9.1 out of 10. The most grown-up broker still accessible to retail in 2026. Bank license, deep product, professional platform, priced accordingly. If your portfolio has graduated past the CFD shop, this is the upgrade.
Saxo for grown-up portfolios needing bank-level custody. Full review linked in the description.